Good morning, ladies and gentlemen. A warm welcome to you. I'm distinctly honored to welcome you from all over the world to this very special event here at the 7th G20Y 2016 in this wonderful location in the Swiss Alps here in St. Moritz. My name is Barbara Kreisler and I will be moderating this morning's session. I'm a member of the G20Y Advisory Board. In my professional life, I work for Philips Lighting in B2G, Professional Lighting, Public and Government Affairs. On behalf of the G20Y Association, I would like to extend to you a very warm welcome and also the sincere appreciation to take time out of your busy schedule to attend this very special event. Most of you already probably had some time yesterday during the cocktail to get to know each other, and I'm sure during the next couple of days we will have more opportunities to meet, to connect, and to network, and to extend the G20Y family. So this is G20Y 2016. 2016 so far has been quite an extraordinary year. In April, nations came to ratify the COP21 Paris Climate Agreement, the first globally binding climate deal. So far, there are 29 nations that have ratified it. In June, Brexit sent shockwaves around Europe and the rest of the world, and the consequences of Brexit are yet to be seen. In November, we will have presidential elections in the United States with two very distinct candidates. And for better or worse, the outcome of the elections will very much influence some of the key topics that political leaders around the world are struggling with. For instance, climate change. And I'm sure climate change will come up during our discussions in the next couple of days on a repeated basis, and rightly so, ladies and gentlemen. In fact, the United Nations Weather Organization has announced that 2016 is the warmest year ever since temperatures have been recorded. So by many accounts, 2016 is quite a special year. And I think it would be naive to think that here at the G20Y Summit we'll be able to solve all the world's problems in 3 days. That's not why we are here. We're here because we want to insert some fresh ideas, some new thinking, some out-of-the-box thinking into the policy debate of some major international organizations and to positively influence the way they go about problems. We will have a very interesting day today, packed with many interesting events. In a moment we will hear our keynote speaker. Then we will have the opening panel of 7 distinguished individuals. And then we will receive the presentations of the term chairs of the 7 committees. After lunch we will then break out into the separate committees, and we will round up the day by a beautiful gala dinner and a classical concert. Before we proceed further in the agenda, let me just quickly summarize for you what G20Y is all about. The G20Y Summit, the first one, took place in Toronto in 2010, just right after the aftermath of the global financial crisis. And since then it has taken place annually in different locations around the world. It is organized by the G20Y Association, which is an independent, non-profit NGO based in Geneva, Switzerland. The vision of the G20Y is to jointly develop and share some innovative ideas around key policy issues of relevant institutions around the world, and to come up with a set of perspectives. In fact, the committees, their main tasks will be to deliver a final document called Perspectives. And each committee is supposed to develop a set of perspectives of key economic and geopolitical ideas that are relevant for institutions, for business leaders, for industry associations, and for society at large. So ladies and gentlemen, this is your chance now in the next couple of days to put aside your corporate hat for a moment and to come up with some provocative questions, some questions that might be hard to answer, some ideas and suggestions that might represent the view of your company but not necessarily have to, because you're here as individuals, and this is also what makes this event very unique, so that we can share freely and openly ideas that you might not necessarily be able to express in other conferences that you attend. And this is your chance to come up with these key questions that policymakers around the world should be asking themselves, and to perhaps come up with ideas that nobody else has thought about so far. The G20Y committees will then present these ideas to the institutions that you have selected. And we have talked a lot about impact. I think that the impact that we can really achieve is by making sure that these recommendations find their way into the policy debate of these organizations that you have selected, and then to see how they are translated into some policy actions. Okay, let me now turn to the first agenda item. We are all extremely honored and grateful to welcome our keynote speaker, Mr. Michael Miebach. Michael is Chief Product Officer at MasterCard, and in his role, Michael leads the development, commercialization, and management of the company's core product offerings. Previously, he headed MasterCard's operations in the Middle East and Africa. Before joining MasterCard, Michael held senior positions at Barclays Bank and Citibank across Europe, Turkey, Africa, and the Middle East. And we are very fortunate to have Michael also as part of our G20Y advisory board. Michael holds a Master's of Business Administration from the University of Passau in Germany, and he currently lives with his family in New York. Ladies and gentlemen, please welcome me to welcome Michael on stage. Michael, please.
Right, good morning, everyone. Good. Get some energy in this room. All right, I will not talk a lot about payments this morning because you might not find that very exciting. What I will talk about is some of the choices that we've made in our company and some of the choices that you can make in your company about advancing society, advancing the economy, advancing your industry. Now that is what the G20 have in mind. We are not the G20, but we're G20Y, and we can influence that debate. So I thought it was quite useful to illustrate some of these choices. Now, why is that picture up there? So last night you heard from our MC about the wonderful story of Johannes Badrut, the hotelier from this town who kind of inspired a whole industry. Alpine winter tourism came from St. Moritz. So this gentleman, he created his own white space by just looking at his own business and saying, it's not running profitably, what do I have to do? In the end, he took a big leap of faith, he took a thoughtful risk, and he created the whole winter industry. So that story is in the past. I think we all, in our individual organizations, have our own white spaces. So what is that whole white space thing anyway? In the digital world, it is these unused frequencies that are out there in the wireless industry. If you're in an alpine resort, white space also kind of you think snow and all of that. So I thought it was a reasonable title for framing my remarks this morning. Trying to be funny as a German is always a challenge. So I'm not going to try to be any more funny than that. I'll keep my German enthusiasm and excitement and passion up as much as I can this morning to get you all going. Now, G20, why? So Barbara talked about it. I think if you look at the times out there and you think about the white spaces we might be wanting to own, I think it's really interesting to see that there's an organization with a vision that Xenia and her executive committee have put forward that looks at white spaces in a way that helps today. If in a time where we have political leaders out there, they're looking for the refuge in isolation, G20Y is looking for more international collaboration, for more international trade. There's a time out there when more and more people seeking jobs and less people find them. Look at youth unemployment. And here's G20Y, and some of you are in that committee, are looking for a future of full employment. In a time where globalization is benefiting so many of us, but it's not benefiting many out there. Again, G20Y, we're trying to find ways and new ideas on how we can advance that. So those are the white spaces we can fill. Now, when you look at, so here I present a tech company and the clicker doesn't work. Can you advance to the next slide, please? So let's talk about the G20 though, just for a second. Some of you would have seen the news just recently, in case you're wondering what that is people. You've seen the news about the last G20 summit in China. And contrary to previous summits, what I thought was really quite remarkable is that the G20 stood forward and they painted a vision of a new world. In the past, the conversation was, let's address this issue, let's address that issue, and all the things that pain economic developments and societal development around the world. What they put forward this time around was quite starkly different. And here's how that goes. So the vision that was put forward was, we, the G20, which we're not, but they are, they said we want to foster a world that is more innovative, more interconnected, more invigorated, and more inclusive. Innovation, interconnection, inclusiveness, invigoration. A lot of I words when you think about it. Just look around the room. It takes we to make all of that happen. That was a really interesting, marked departure from previous conversations. And when you think about your own industry, you think about your own company, your own community, you find your own white spaces to work towards that world of inclusion, interconnection, invigoration, etc. So I'm going to take you a little bit through the journey and some of the choices that we have to make. Can you advance the slide, please? In our industry, the payments industry. So there's some experts here in the room, but others might not be. So I want to start to dispel a few myths at the beginning. I'm not going to sell you MasterCard, don't worry about it. But I want to make one thing clear. We do not do credit cards, all right? We're a tech company. And the one other thing I want to make really clear is our biggest competitor is a four-letter word, and it does not start with V. Think about that. It's cash. That is our biggest competitor. So that is what we do. We try to displace cash around the world. Now this is an interesting industry. If you look at this slide here, what it basically shows, it shows market trends that work in the payments industry. You all have that in your own industry. And you think back about that vision that the G20 articulated. So there's choices to make on how you advance your own industry. And you could go ahead and you try to drive incrementalist innovation in your own space, or you take forward and you do what Johannes Padrup did and take a major step forward. So some of the things that are going on in our industry, you have a lot of new players, you have a lot of new entrants. There's one of those players joining the panel right after this first session here, Klarna. So I just talked to Anna. So here's an interesting player coming into the space of e-commerce. 5 years ago, we would have thought, oh my God, friend or foe? So what is the conversation we should have with Klarna, if any? So I'm going to talk you through some of these choices and what is going on. Other things that are affecting you. Things that are affecting you is nationalism, regulatory impact, all of that. Again, it's something where I think we, in this room, we can drive a dialogue to get those regulations into the right kind of space. And if you pause for a moment, you look around the room, look behind you, look ahead you. There are people from other industries, people you would have never met, you would have never talked to, and for sure never sat in a meeting with for a whole day to figure out what might be the idea to advance regulation in the space of your industries or across. So it's a good moment to pause a little bit and see and recognize the convening power that Xenia and her team have put forward with the G20Y vision. This room would have otherwise never gotten together. I think that's a big call out to you and your team. I find it quite fantastic. When I was at the first summit, 2013, I think, in St. Petersburg, lovely hotel, all very nice. I asked myself the question, why are we here? What is this even doing in terms of making a difference? Is this really having impact? As you can see, I'm still involved, so kind of got hooked to the idea. But that convening power, this dialogue, this forum would never be there without Xenia, and I'm so happy to see all of you here. But that dialogue, all those industry forces that are out there, that is what we can hopefully influence. So it's happening in our industry. People are coming in, regulation is changing us, new technology is happening, all that. Now, think again about, can you advance the slide, please? I think I can just get rid of that. It's really not working. If you then think about the white spaces that each and every one of us can try to fill, that unused opportunity, with the industry forces that are at work in your industry. So for us, we were looking back at this just recently when I was thinking about these remarks. We were looking back at this vision of the G20, inclusiveness, interconnection, invigorated, and innovation. So those four. We have white spaces in our industry that we can fill to work towards that vision. Now, next slide, please. The first one I want to talk about. So this is, if you're an auto enthusiast, you know it's a gear shift in an Audi. If you're not, what this tells you is someone is shifting gear into D. Now, innovation. Let's talk a little bit about that part of the G20 vision, innovation. So in our industry, quite interesting. The payments industry, you're all used to it. We have made something fairly complex pretty simple. You take a card and you swipe it, you tap it, you dip it, and just something pretty complex just happens. Now that is dramatically changing. It is dramatically changing because everything has already moved into the digital world. So the piece of plastic is is really a form factor that is going to be something of the past. What do you do in that industry? Now, there was a time when someone in Kodak said that digital is highly overrated. Kodak is really not around any longer. If you look at that, we could be that. Now, the good thing is the underlying consumer expectation hasn't changed. People always want one thing. They want access to their money all the time, everywhere, whichever way. They want convenience. It has to be simple and smart, power at the hand of the consumer. And lastly, everyone wants a secure payment. So that hasn't changed. But all these needs now need to be met digitally. So how do we do that? So back to the choices we can make in our industry, and those are some of the big questions you will have to ask yourself, is we could go ahead and we say, all right, let's find those solutions and we push them out to the consumer. Or you realize that in a world of digital, which is a reality today, that train has left the station long ago, that you will not be able to drive all the innovation that is needed by yourself. How can I enable a more scaled set of consumer choices out there? Now, there's so many fintech companies that have emerged, and so many new digital wallets and all sorts of other things that are coming into the payment industry, and guess what? None of them have scale. So how do we solve that as an industry? What is the choice that we can make? So we basically said, we've built something for 50 years that is of such unique value. It's the largest payment network in the world. And my sales pitch, just for 1 second, is also the fastest. And we connect 23,000 banks in 211 countries, all that. Now, just imagine for a second we open that network for all of you to innovate upon. And that's exactly what we're doing. We're making the big choice to say, to drive towards that more innovative future, we will open our network. So if you go on mastercarddeveloper.com, you will see a set of APIs. Everything that we do, you can access. And we invite the development community out there to innovate on our network. That was imagine the boardroom conversation that we had when we decided to do that. That was a big freaking deal. And it wasn't one word conversation, it was a series of them. Big deal. But I think that is the way to go. Now, in the payments industry, it's a very unique industry. It reminds you of Pepsi and Cola. It's kind of like two networks, been growing pretty much in parallel for 50 years. It's a pretty unique construct from an industry perspective. In the last 2-3 years, there's a juncture, going left, going right. We're going right because we believe in that vision that the G20 put out there. Has to be more inclusive, innovative all over. So we are trying to facilitate that. So here is shifting gear into digital all across, and we believe we can only do that if we pull everyone else into the system. Now, let's talk about the next I, or the we, rather. So interconnection. Looking around the room, I'm seeing a lot of phones here. So those of you who came here from Asia, they're probably checking what's going on in the office, what's the family doing, and all that. We're glued to our phones. So I have 3 of them. I actually have iPhone and Android, the reason being both of them have different types of digital wallets, and I got to test out everything. It's just part of the role. But people ask me, why do you have so many phones? That is the reason, actually. But you know, the phone is becoming the center of your personal life, of your professional life. It is becoming the center of your financial universe. So if you recognize that, again, a big decision we had to take is, your business rides, our profits every quarter that we announce to the street, ride still predominantly on plastic. But it is pretty clear that payments has to be at the center of the phone, or you reverse it, the phone has to be at the center of payments. Now that's a big decision. And then you go ahead and say, all right, is that what we as an industry player, is that how far we should really think? Because that's pretty obvious. I just didn't tell you anything new with that. And we said, no, actually let's abstract from that. 3-4 years ago, no one really thought that the phone is at the center of everything that we would be doing. Or maybe 5 years ago, whatever point in time you pick. So we said, who knows what's happening in 5 years? So what is the big concept behind that? It is connection. It is always connected. There is even a term known now as FOBO. I don't know if you've heard about that, but it's the fear of being offline. It's actually a medical condition, so people do have that. I suffer from it, absolutely. So I admit to it. There will be anonymous offliners going forward. So we have that, and that is something, the connection does matter, so it doesn't stop at the phone. So if you think about the Internet of Things, we are looking at a future where we're going to have 50 billion connected devices. So the way we look at this, one of the big choices, again, that we're making in our industry to drive the dialogue forward is to say, in the end, every connected device should have, if the consumer wants it, the power to be a commerce device. So what does he talk about? I'll give you an example. Washing machines. So today you buy a washing machine and then you wash. That's pretty straightforward. The future is most likely going to be that you will not buy a washing machine, but you will actually buy a round of washing. And your machine will buy that from whoever is the equipment manufacturer. That is what Samsung is thinking. So how does the machine do it? It's got to connect to something and make that purchase of the next round, or order its own detergent, whatever it might be. Your fridge, same thing. Who wants to go out and buy that same carton of milk every week? It's really not a value-added activity. You have other things. We're all very busy. Time is the ultimate currency of life. We're starved for time. So if your fridge can take care of some of that, that'd be pretty cool. So connected devices. We went out there and we are investing money in all of that. 50 billion connected devices should be commerce devices. That is taking the industry forward. We've created the operating system behind payments for 50 years in the physical space. And now we think we want to do the same thing when it comes to the digital space and all these connected devices. Now there's a way to do that. Let's say, all right, it's my way or the highway. And I think that's a bad choice. It's back to this whole idea of driving innovation through others. So what we're saying is, in the end, it has to be digital by default. Our products are going to go out there, and we're partnering with banks and with merchants and everyone else who's part of the broader ecosystem. Big choice, big white space for us, connection. We want to have everyone connected. Innovation, those two. Let's talk about the next one. When you think about this vision of inclusiveness, interconnection, all that, the one word that sticks out that isn't really clear, what the G20 was talking about, is invigoration. What does invigoration even mean? But even if you look at your industry, whatever you might be doing, there's going to be a path of development, and you will see it plateauing over time. What you will see is that incremental innovation will drive profits down over time, and you will have a race to the bottom. At some point in time, someone in your industry, and it could be you, needs to step back and see, what does that break out? How do we take that forward? So invigoration in the payments industry, plastic, 50 years, all that. In the end, it's all payments for one time. You as consumers, what do? You go and you pay a merchant for something that you buy. That's pretty cool. But you know, there's a lot of different types of payments out there. That is, you try to pay, let's say, you try to pay a friend in another country. How do you do that today? Almost impossible to do. Very, very expensive. So I just moved to New York. And here you think this is the most advanced country in the world. Here's the valley with all the ideas that come from the West Coast. And guess what my new US bank sent to me after I arrived? A checkbook. I haven't seen a checkbook in 10 years. So I get a checkbook. And you kind of wonder, is that, invigoration checkbook, that doesn't really work. So there's something in the payment ecosystem that we need to think about, and how do we advance the industry. Now again, that's a big leap of faith. Thinking back to what this hotelier guy did here in St. Moritz, so how do you break out of that? And how can you actually advance a whole industry lead from the front? So we could have put more features on cards, or put more digital wallets out there. We're doing all of that, no question. But in the end, the question, what is happening in 10 years? What is in 15 years? How do we address all of your payments, choices, and needs and out there? And we said, okay, bank account payments. People want to pay with cards. They want to pay later, use credit. They want to pay now, use their bank accounts. Today, when you make a bank account payment, what happens is, if you're lucky enough not to get a checkbook, but you can actually do that, it will disappear. 3 days, and it might come out at whoever you're paying, and you don't actually know what the amount is that comes out, especially cross-border. So we had a vision of the industry of payments will come across bank payments, across card payments, whatever it is. It will all converge over time. So we stepped forward and we said, okay, that is what we really need to do for the industry and for the regulator. So we engaged in a dialogue over the last 1.5 years with the EU Commission, with the regulators in the US, the Fed, you name it, and we had this dialogue. In July this year, we announced the acquisition of the largest player in automated clearinghouse payments, i.e. bank-to-bank payments, a company in the UK. And here, when we explain to people that in the end, all payments will in the end converge at some point in time, people get it. That was a pretty easy boardroom conversation, by the way. When we talked to our board in February, it took us 5 minutes to explain that we believe everything is going to converge over time. The last 55 minutes of that board meeting was, okay, how do we do it quickly enough? So, convergence, it's a big deal. That is reinvigorating a 50-year-old industry. Everyone is now starting to think about, oh my God, a cards payment, very cool. If I want to return something, I can actually do that. I can call the card company and say, I don't want to do this any longer. With a push payment that you do from your bank account, you can't do that. So how do we take some of those services, we put it in? It's a whole new momentum of growth that is coming into the industry. On Tuesday evening, I was in New York on the sides of the UN meeting, the UN Assembly meeting, and we had a little reception hosted by the Prime Minister of Great Britain, and she was looking at US companies like us to have a dialogue on how investment in the UK could be fostered. And I talked to her about this acquisition that we made, and the interesting thing is, she said, oh, that's great, that's brilliant, good jobs in the UK and all that, but let me ask you one thing. What kind of regulatory environment do you think you need to advance the payments industry into this vision of converged payments? And that's the kind of dialogue that you want. When the Prime Minister asks you that, you say, okay, clearly you are a voice in the industry. So we're trying to fill that white space. Now, advancing, can you roll forward on the slides, please? So that was driving more choice. Growing the pie, next slide, please. And the next slide. So, last point. Inclusion, interconnection, invigoration. The last one, inclusiveness, dearest to my heart. That particular G20Y summit in 2013, I was in the banking committee because I was a banker at the time, And that was an interesting conversation. We talked about banking regulation, we talked about cross-border risk, we talked about know your customer and all those fun things that you're going to be probably talking about in the next 2 days. I was excited by the topic of financial inclusion. Because in the end, when you think about it, there's 2 billion people out there that are not part of the financial services that we're discussing here. If you look at it through the lens of our industry, 85% cash, 50% electronic payments. If we would just take a step back and we said we assume a world of financial inclusion, we have just built a market that's 7 times as big as what we have today. Now that's pretty cool. The way to go about that though, that is again a big strategic choice. That's a white space because you will initially not make money. How do you make money out of very low value transactions? How do you even have the vision to think 10 years ahead when your next quarter results are waiting? So, big debate. Now that was the longest debate in the boardroom and it's still raging. Is it a hobby? Is it philanthropy? What are you guys doing? Yesterday, while I was making my way through that horrible curvy road to St. Moritz, sitting in the backseat of a car, and I get motion sick very easy, you get the idea. My colleagues were in Washington, D.C. at something called the US-Africa Business Forum. President Obama was there, and he referenced our work around financial inclusion in Africa, where we've pulled in over 100 million people into the financial system. Now that is, again, in the end we do this for business reasons. It's not philanthropy. 270 million people across the world that we've pulled into the system in the last 5 years. And what's cool about that is a given, that's giving a reason to merchants, that's giving a reason to retailers, it's giving a reason to e-commerce providers to say, all right, here's demand. If you want to drive demand-driven economy around the world, you got to pull people in, otherwise it's not going to happen. And with that, we're building our own markets. Exciting stuff, yet another white space for us. That we're very excited. I felt pretty proud last night when Obama talked about us. Next slide, please. I was feeling even more proud when I read that. That is the July edition of Fortune. And what do you see in the middle? Hardly. You can hardly see it. MasterCard. Now, I'll stop there pitching MasterCard to you. That is not the idea, but again, we are building our own market. That is a big white space. So you will have that in your own industry. And if you can if you step forward, if you use the next 2 days to come up with some ideas on how things could be driven forward, I think it will be 2 days worthwhile. We're taking risks. You can take risks. It does take that. Last slide, please. Just one more. It comes back, just one more. It comes back to this idea of what is the impact that we're going to have in these next 2 days here in this room. If you believe you can change the world, you have a chance to do it. If you don't believe you can change the world, for sure you won't do it. Those 4 topics that I just talked to you about that we looked at in our company, there was a lot of doubters. There was a lot of people that didn't believe. In the end, we took the leap of faith, and it really changed our industry. It's changing the dialogue. And we're looking forward to engaging across the world in public-private partnerships and forums like this, which is the main reason I'm still involved, and looking forward to have that conversation with you. So please, seize your white spaces over the next 2 days. And with that, I'm going to hand it back to Barbara for questions either from Barbara or from you this morning. Thank you very much.
Thank you very much, Michael, for setting this frame of the G20Y Summit this year and for this very inspiring speech. Very much appreciated. I would like to open the floor to the audience for some questions, but before that, if I may, as a moderator, take that advantage and ask you the first question. Michael, you talked a lot about white spaces. But I think there are many companies out there that are not free to invest in products outside of their traditional product range. How did you, as a leader, convince your board and other stakeholders to go down that route?
You know, it's interesting. It is the central question. How do you really make a difference? How do we all make a difference? If we fail on that particular challenge, we're not going to advance. In the end, you know that picture that you saw where you saw that boy in front of that gentleman in Africa? You know what that picture is? That picture is the gentleman is taking the fingerprint of the boy. And why is he doing that? That is for biometric authentication for a social benefit program in Africa. Now, that's a really long-winded way of answering your question, but I'm going to get there. Here is the story behind that. If we would have gone to our board and we said we want to do good things and change the world, they would have said there's something called the MasterCard Foundation, leave it to them. What we actually went to the board with is we said we believe that biometric technology is going to change the face of payments. And here's a use case. It is in the largest economy on the African continent. You're going to have 12 million people that will hold a MasterCard. You think that's a business case and we should invest in that? We did. So it's got to start off in the reality of the company. If you come with something that is way out there, it's really not going to work. Today, when we look at biometrics in our company, we do things, crazy things like selfie pay and so forth. So biometric has really gone very far, and today it is one of our fastest growing business lines, but it actually started in South Africa for that need. And I think that is the kind of things you have to put forward. The board will then say, all right, that is a reasonable balance between short, medium, and long term. That's a thoughtful risk. We're backing you with that. We got some risk money at that time, and we've paid it back manyfold since.
Thank you. Okay, I would like to open now the floor to the audience to see whether there are any questions that you would like to pose to Michael. I think there are some microphones that are in the room. Yeah, I see one there. So if you would like to ask some questions, then please go ahead. Please.
All right.
Good morning. James Rockwell from the WLPGA.
So James, you're from what?
From the WLPGA, which
Okay.
is the Gas Industry Association.
All right, good. Thank you. That was helpful because I wasn't quite sure what that was.
Do you look to develop collaboratively with your competitors, common platforms, or do you see this as an advantage for your company, with the risk that you will later fragment the industry? So you have to make a choice as a consumer between MasterCard
Yes.
payment system or Visa payment system.
It's a fantastic question. It is the raging debate. You know, the specific industry construct that we have, there's another unnamed American payment company, which we shall not talk about, but it is that tension, that healthy tension on where do you collaborate and where do you compete. It's a really interesting choice. There have been Harvard cases written about how that is going to work or not. When it benefits the overall industry, we do collaborate. We do collaborate mostly in standard setting. So, because in the end, what you really not want, to your point of fragmentation, if you have to have a multitude of payment methods, because they work only in one place and they work yet in another place, that's really not what they want or what we want. But when it comes beyond advancing the whole industry and pushing cash out of the system, that's just about the point where our agreement stops. And we will try to compete as aggressively as we can. But you know, that juncture that I talked about, where there was parallel development in this industry, in this particular industry for about 50 years, and now it's diverging, we have a view that we can scale through you. So collaboration works with our customers and with other payment system stakeholders. Now, our competitor, they should talk about their own strategy, but in the way it's coming across to our customers, at least, they will seek the route to the end consumer. And with that, with 7 billion people out there, you will not be able to scale to the same degree. So yes, we will collaborate. Industry setting, things that matter to everyone, fraud rules, all those kind of things. But it's a really interesting debate to think about. When you look at the power of data, the combined power of data across all types of payments will help a government immensely. You can charter routes to economic growth for a country when you take real-time data across all payments. You see what people are doing, what they're not doing, what payments are going through, what they're investing in, everything. You can describe an economy with data. The question is who owns data? And you can collaborate, but it is one of the biggest differentiators that you have. That is probably the area where there's the most heated conversation on should we collaborate or should we not collaborate. In the end, what I believe is that the industry will only get so far on self-curing that kind of problem and agreeing beyond basic standards. It will in the end be governments that set the standards and say, all right, here's where we allow you to collaborate. In the country that I just moved to, antitrust considerations are huge, so there is actually a push from the government to avoid collaboration at industry level to a high degree. In the EU, it's quite the opposite. So it's playing out in an interesting way, and you have to be very vigilant and make the right kind of calls. What we believe in the end, enabling our partners, is the basic concept that should win the day and help everyone. Krishna.
Michael, thanks a lot for your talk just now. Can you share, from your role as Chief Product Officer at MasterCard, can you share how you're building product management talent, product management, community of practice, and know-how within your company? I think it'll be very helpful. I'm a corporate strategist by background, so that's one of the things I question my board and my executive committee, right? I try to make it very difficult for them inside the boardroom. Yeah.
It's interesting, huh? And so we're a B2B to C company, so not animal. So we have a consumer brand, but actually we interface with banks, with merchants, and other people out there. So this question of how do you build product management muscle, get into the DNA of the company, is not something that we've been naturally doing. Companies like Procter do that for a living. Consumer packaged goods companies, consumer technology companies do that. We don't. So we had to do quite a significant change over the last 3 years to, that whole digital shift that I talked about. It's all about digital user experience. If you can't get that right, you're going to fail. So how do you get people that understand that kind of stuff and who are excited to work for a company on the East Coast and not on the West Coast, although you're in digital? So one of the practical things that we did, you'll be amazed by that. We have an office outside of New York, and it's a boring place called Westchester County, classic US suburbia. And we didn't get any people that are digital product management types to come and want to work there. And they said it's the last thing on earth, the last place on earth we want to work. So there's something called Silicon Alley in Lower Manhattan. So we just rented an office there, moved some of our people from one place to the other, and suddenly they came in droves. Fascinating. So we're paying overpriced New York rent for that, but it's worthwhile. So it was really changing about the kind of people that we attract. We moved away from hiring bankers. We moved to hire people from Procter who really live and breathe product management. But the most fundamental change was that in the B2B to C, we focused on the C. We have huge research departments, which we never used to have. We really try to understand the consumer. And then as we build stuff, we put that forward. It was a dramatic cultural change. All the other things around product management, it's a whole discipline, and there's endless research around that. Obviously, we're doing all the basics around that. But the consumer focus, getting a whole different profile of people in, that was the kind of shift we had to make. There was a time when I joined MasterCard from a bank, the call came, and I said, I love banking. That's a pretty cool job. And I said, do I want to be a payment nerd? You probably think this guy's a payment nerd. It's like, how nerdy does it get? Who wants to be in payments? But today, we're getting people that are looking at us and saying, all right, there's a Google, there's an Apple, there's an Amazon. When it comes to technology in the payment space, we are the tech giant in that space, and we get those kind of people. That's actually quite a dramatic change. Yes.
Thank you very much for your encouraging speech and a lot of new things that we hear. My name is Roman Shahudinov. I'm Deputy Prime Minister, Minister of IT of Tatarstan, and we are #1 in e-services and e-government in Russian Federation. Tatarstan is a part of Russian Federation. And we have an extensive relationship with MasterCard. We have an
I
agreement.
am aware of that, yes.
Yes.
We
and,
should have a coffee later on.
Yes. And it's for the things we do, not only coffee.
Yes.
But and we came further. We have a very good, let's say, platform and service, and we have our bank, and the key partner there is MasterCard. We issue.
This was not arranged, by the way, okay? So I had no idea you could say that.
It's of course it's just one of the parts of Russia.
Yes.
And we issue virtual cards. Virtual cards. It's a transferring, it's transitional period for the people that is still have this piece of plastic, but they are ready to make an autonomous payments and so on. And we started getting proposals from other payment platforms to be incorporated in the state resources. This is state or not state is just an example. And we have contacts with Alibaba Group for the supporting of the export and of the import, retail export. What are the future of payment systems like MasterCard in collaboration with these things that are not so huge yet, but we think that it will become very substantial. What are the, will you incorporate in their resources, and how it will work? How this new, let's say, subjects of the transaction business will interact with you, and how you will interact with them. It's quite practical question. We will not change it for the time being because we have conditions quite good. It's just 0.5%. Yes, but they're pushing.
Yeah.
Yes.
It's an excellent question. Comes right back to the first question that I think Jason asked. So the friend or foe collaboration, where do you compete? So it's interesting. Our partnership with the government in Tatarstan is we're the unique provider. So you could expect me to say that I'm very happy of being the unique provider of virtual payment solutions in that country. That's great, but you know what? Back to this whole idea of, in the end, if it doesn't lift everyone's boats, that is a problem. We're quite happy to compete on value-add services beyond the basic infrastructure. So, if at some point in time the next set of players are coming in, that is perfectly fine. It's exactly what we want in the end, because only then will we drive out the 85% cash that are out there. Now, the question that is interesting for someone like you and the government is, what will win in the end? So there's all these choices as you can make. Let's say you're a chief technology officer. I'm sure you have someone who has that lovely job, and he will have to make, or she will have to make the decision on, I'm going to bet on that, invest here, now, short, medium, long term. How do you make sense of all of that? As we deal with our customers, that is the key question. They're looking at us and say, can you decipher that world out there for us? So innovation roadmaps, partnerships to say, how long do you go exclusive? When do you open it up? You need to have a period of exclusiveness because no one otherwise will ever partner with you and co-invest and put risk capital in. But at some point in time, it has to be clear. Things won't scale if you don't open up. Now, the thing is, back to the juncture, I don't believe that all networks are thinking the same. We do believe that when Alibaba finds there is a way to provide services in Tatarstan, that in the end, at some point in time, we should have that conversation and figure that out. There is a reason that in China, Tencent and Alibaba and the likes dominate 90% of the e-commerce space, and it's not MasterCard. Well, actually, the real reason is Chinese regulation, but aside from that, it is a very slick user experience, and I think we as an industry, we need to take that step forward and make sure it comes together. So it's a tough one. I want to maximize my profits for sure, but in the end, back to this picture of the pie on there, I'm going to have a really big piece of a small pie, I'll get a smaller piece of a big pie, I go for the latter. Yes.
My name is Umesh. I work for Mitsubishi in Singapore.
Hello.
Question is how to MasterCard view the avoiding of misuse of the technology We talk of inclusions a lot. We want everybody to use it, but in the flow, the unwanted elements in the society also use it. So, what policies do you have in place, or companies should have in place, especially the tech companies, where it's very easy to access these technologies, the social networking, the use of credit cards, transfer of money internationally? How do you look at when you create policies that the technology doesn't get misused?
Yeah, it's I take you back to our boardroom. The conversations that are going on in our boardroom. There is the board audit committee. You all have one, I'm sure, if you're a public company, even if you're a private company. What is the main topic that's discussed in our board audit committee? It's the cybercrime risk. We have the largest private data warehouse in the world, and guess what? We're attacked round the clock. As I'm standing here, someone is sitting somewhere trying to hack us. So, huge investment in the integrity of the system is the first thing that needs to happen. I presume most of you would say the same thing. Now, just because we hold a lot more data than most of you, we have to give it a little more focus. But then you think about this world of opening up. You're getting fintech players, you get a lot of other people that are potentially the weakest link in the payments ecosystem because they get in and they use your data and they provide a digital wallet or whatever it might be. So how do you secure that kind of a system going forward, at a mushrooming type of system? What we've said is, what our role should be, that in the end, the one thing that we will do is that we guarantee the same kind of security of transaction. So, what does that mean? Is the tokenization behind all of those, everything moves to tokenized payments and digital, meaning your payment data will never be out there. If you use a digital wallet from a small fintech startup and they give you a great consumer experience, but they don't have the money to invest in the full security that we have, well, if it runs on MasterCard, in the end you can rely it's just as safe as using your AMV chip card or whatever it might be. So, making sure that you identify what is the common layer of security is the next thing, other than securing our own system. And then you come to rules and regulation. And you say, all right, it's a fine balance between scaling the system in one pay and getting as many people in, but at the same time realizing you get the bad guys in as well. So how do you do that? Now, regulation out there, those of you who are in banking know that, compliance, know your customer, anti-money laundering, all that. Those are big topics in the financial services industry. They're just as big for us. In the end, you need to strike that kind of a balance on how do you get a risk-adjusted set of policies and regulations going. If you try to pull in 2 billion people that are financially excluded and you put the same kind of level of compliance around them, you're never going to get them into the system. So we're having quite an active dialogue with regulators around the world and say, balance it. Hey, know your customer. For a $5 Kenyan shilling transaction doesn't have to be the same as if you transfer 19,000 euros from one person to another. So that relativity of regulation in the context of what the underlying use case and transaction is absolutely critical. We're seeing that dialogue come to fruition. I think that pendulum of nationalism and regulation after 2001, September 11, swung one way. It started to come back to the middle, and I think we see a lot more sensible regulation out there. But in the end, keeping our system safe, keeping everyone else safe to a same minimum, and setting the right kind of regulation, that is the way to go about it, at least in our view.
Michael,
Yes.
Anil Khurana, partner with Pricewaterhouse in New York and Dubai.
All right, good.
So do a lot of work on strategy and future business model with several companies, not banking. I'm actually not a banker, know nothing about financial services.
That's
So
fine.
I'm on the Creating Jobs Committee, and so several themes that you touched upon. So I have a fundamental question, but let me outline what I... So when you look at the data on creating jobs, and I'm
Yes.
not going to focus just on that, we find that half the jobs in the world are created by small companies,
Yes,
as opposed to large companies.
yes.
You made a statement that fintech companies don't scale, right? So now that's in a way, an interesting statement because, well, I think neither you nor I can look at the future. And I think I understand the reason why you said that, which is the connectedness, the regulations, the
Yes,
network
correct.
effect, and so on. But if you look at other industries, including Alibaba that was mentioned, these were startups that 10 years ago no one knew about, and today are beginning to change the world. And especially given in the industry you're in, which I don't think is any longer a payment industry. It's a payment industry, it's a technology industry, it's a communication industry, it's a retail industry. You can name it, from any angle you want. How do you think about the competition coming from next door or around the world that you don't even know that's going to scale up in 5 years and 10 years? How do you scan the universe or the world to see whether you should partner? You don't even know who to partner with.
Yeah. So I made this somewhat flippant comment earlier that the reason that Alibaba scaled was a very unique regulatory environment. So that I think that is still true though. Around the world, but there has other players that have emerged that weren't around and no one could predict. So you're right. As we look at our ecosystem and who we partner with and who we don't, we know what we know today, but we're only 12,000 people. We're actually an SME ourselves, if you think about it. How do we have an idea on what's going on in the world? So we created our own venture capital funds. We're out there by taking bets. We're investing in funds of funds, and we're scanning. We're driving partnerships in the Valley and all around the world. In Silicon Savannah and Nairobi, we're partnering with NGOs. So that whole partnership idea that I was trying to convey to you, in the end to decipher who's going to win and not and who's going to scale up, that is, I believe, the only way to do that. Now that is an interesting activity when you think about returns and you think again about the next quarterly results and how do you argue that in the context of a boardroom conversation. Because people say, hey, what are you doing? So this stuff is siphoning off somewhere, but we really need to see the shareholder return that we were looking for. So that's our approach is scanning the world, partnership, investing, taking bets. The financial inclusion space that I talked about, we've put in a huge stake into a financial inclusion fund because we don't even know who's all out there. But through that fund, we have investments in, I think, 60 financial inclusion startups. One of them will work in the end, and we will be part of that. Will one of them be competing with us at some point in time? Potentially. Then we just try to buy them. That would be the best approach, I guess. All right. I think with that, we've come to the end of this first session, Barbara.
Absolutely.
I think I'll leave it at that.
Thank
Thank you very much.